Greetings. Welcome to my weekend market recap, 12th March 2022. I'm Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to follow me on these channels. All these are open to the public. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Good morning, Dr. Jeffrey. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems for my trading. They run on Metastock and TradeStation platforms as add-ons. That was the last slide. Let's continue with the live systems. First, a look at the global markets, starting with Australian Index All Ordinaries. Once again, we see how the trend line support and resistances work on all instruments. We already knew that there were multiple trendline resistances. Therefore, on Thursday, when price closed right at the trendline resistance, on Friday, we could switch to intraday pivot chart to look for a shorting opportunity using 5-minute chart in the morning session, and that trade, looking at the daily chart, would have closed with a sizable profit. That is the same technique I use in India and USA market as well. If I see either the index, ETF, future, or individual stocks stopping right at trendline resistance, then next day I may look for a shorting opportunity using 5-minute intraday chart. On Friday, all ordinaries closed lower. However, the candle shape is still yellow. Weekly candle color is yellow. Weekly color is also yellow. Therefore, there is no trade setup in all ordinaries. What about the trend? Is it in an uptrend or downtrend? Now there is no clarity. Earlier in this area, we had lower high, lower low. So we knew it was in a downtrend. However, at this point, it made a higher low. And then it made an equal low, double bottom. If we look at the highs, the swing highs are coming down, but the swing lows are no longer coming down. So we are not sure about the trend. It is range bound. The range is created by watermark pivot at the bottom and trendline resistance at the top. It's range bound, and when it is range bound, we can trade it in multiple ways. One is when price comes to an edge of the range, try to take a reversal trade like we could do on Friday using intraday pivot chart. Or we could look for a breakout. The breakout may happen to the upside or downside. We may wait for either of those kinds of trades, none of which are available as of Friday's close. What about Japan's index? Topics. Now, one thing you notice, though the news media is having many concerns about the war in Ukraine, the all ordinaries chart is going up down in a normal fashion. If I close the dialog, if anything, the sharp drop happened here might not have been for the Ukraine conflict. The move since then, up move, down move, is just regular move, and this is what I mentioned in the last webinar also. if we focus too much on the media, we will think that the market is crashing or we should stop trading and we'll wait for something good to happen. That's not the case. The movement of all instruments, including USA market, last couple of weeks is exactly as market moves all the time. If we didn't read the news, we wouldn't know from the charts that any war is going on. Let's see if that is true in other markets, and it will be true because that's how the market works. Topix index, Japan market. Here we have clear idea whether it is uptrending or downtrending. Trend line resistance, no trend line support. That is a way to know that it is downtrending. Price moving between middle of the two boundary lines, upper boundary and lower boundary. Price moving between the middle of the boundary lines and the lower boundary. That is another way of knowing that it is moving in a downtrend. And of course, the traditional way of knowing it is in a downtrend is that it is having lower highs and lower lows. So it is downtrending. The second question I ask myself is, do we have a shorting opportunity? The answer is no. It is already at the lower boundary. It will be too risky to short now. What will be the next possible trade? We see multiple trend line resistances, and we just now saw how Australian index stopped right at the trend line resistance. So now if Topix goes up to one of the two trend line resistances and starts to go down, once again we could switch to intraday pivot chart and look for low risk shorting opportunities. Right now there is no trading opportunity neither in long nor in short direction. Let's now focus on some of the band indicators, jump and thrust indicator. Both of them have turned magenta here. From that point, a recovery is likely. That came on Wednesday. What did we have Thursday? A bull release signal, a bullish color, bullish shape candle, and big move up 3 that came at price extreme low. I don't know what will happen with Topix, but when we see big move up 3 at pendulum low or price extreme low after jump thrust low, almost always it goes up. How much? Enough to give us a profitable long swing trade. Now in this case, would I take a swing long trade on Topix on Thursday when we had the bull release signal? Here the answer would be no for me because the trend line resistance is too close. So I would not like to buy Topix on Thursday even though I had the big move up 3 at price extreme low with bull release with bullish color because of the trend line resistance. However, that is about the index. Individual stocks might have given buying opportunities where the reward risk ratio would be attractive. That is how I combine all the signals and I do take reversal trades comfortably. Again, these are swing trades, reward risk ratio equal to 1 or more. As soon as I covered the risk distance, I book at least partial profit, and I did that in last 2 weeks. And I think 80% plus of the trades made profit. Most of them happen to be actually in the long direction, and I shared many of those trades on my Twitter page and forum. It didn't matter that a war is and was going on. I could book profit once the risk distance was covered. Topix is also in a downtrend now. What about China market? In last couple of webinars, I showed that there was a trend line support in weekly, and I mentioned that unless that support is broken, though CSI 300 was in a downtrend and it is still in a downtrend, I was not going to short. Now, when was the next trading opportunity after my previous webinar? if we follow Q techniques, that would be right on this day, because this was the day when at the open or soon after the open, 1 2 3 4, actually at the open on this day, I remember I watched the market at the open. It was below the trend line support in weekly, and not sure if you're able to see here, it had a gap down open below major trend line support, which was coming from far away, gave us a gap trading opportunity. It could be long or short depending on how price moved after the gap open. And looking at the candle, we are almost certain it moved down, so we could use the gap short intraday trading technique to take a short on CSI 300 right near the open on this day. At the close, it would give significant profit relative to risk. Looking at the bearish shape candle, we could book partial profit and hold on to the remaining position with trailing stop, and the trailing stop might have been hit. Would it be hit? Let's check that out. Okay, let's apply. Now how do we apply trailing stop? Let's discuss a bit more on that. Today I am discussing a bit more on the techniques. Market recap will happen as usual, but let's discuss the techniques a bit more. So we would have taken a gap short intraday with confidence because the risk was very small. That is of utmost importance. So we had a profit. We booked partial profit. We held on to the remaining position. Or if it was an ETF, I could close the entire ETF short position and with part of the money take a bearish options trade. So let's say we took the trade with ETF or futures. Then the question is, how would we apply the trailing stop? Our entry price would have been somewhere here. If we could have a stop below that, that would be better. How could we do that? Let's go to the intraday chart. I have created some custom templates to look at the instruments from multiple angles, and here I have one entry daily on the left, same entry but change to intraday, in this case 30-minute, then intraday pivot 5-minute in the morning session and stop intraday also. Let's look at the stop, and I'm going to change it to 30-minute. Let's change it to 10-minute. I want to see the pivot lines. Okay. Okay, I understand why the pivot lines are not drawing properly, because I have not changed the session start and end times to match with China's time, but it looks like this day somewhere. Let's say here, let's say we shorted when it went below early range low, and as price came down, it closed near the close of the day approximately, because the session times I have not changed to match China's session times. Then the remaining position, where would we hold? One way is to hold it with the initial stop loss. So long as we book profit in enough position, and what is the easy formula? If we book profit on 2/3 of the position when my reward risk distance is at least 1, then I can keep my trailing stop at the original stop, initial stop, and even if that gets stopped out, I'll still have some profit. So we could do that, and then as price continued to go down, we could move down the trailing stop. When it came here, we had significant profit. It seems to have closed near the, actually it closed somewhere here, so it made a low and then price closed higher at the close of the day. So we could then change the trailing stop. Where? Let's change it to 30 minutes. Not easy, right? The pivot lines are not drawing easily, so I am going to change it to daily chart. Okay, so this was the shorting day, gap short day trade, and then the stop was moved to this position next day. That was below the entry price. So what we could do on the entry day, we could book partial position. If we use daily chart, change it to a swing trade for the remaining position, we would move stop here. That stop was not hit, and on Friday that stop level has come here, so we would move stop to this point now as of Friday's close. So see, our entry price was here, initial profit this much, and currently the profit is slightly higher than that, slightly higher than the profit on the initial position. Now if it goes up on Monday, that stop will be hit. We have no harm, we would exit with more than reward, more than risk taken in the trade. On the other hand, if it goes down, we'll continue to hold the short position. That is how sometimes I exit partial position in a trade that I initiate intraday in the morning session, and then move my stop in a way that the trade is almost guaranteed risk free. Okay, that was China market. Let's go back to China market again. .CSI 300. What is the trend? It is clearly in a downtrend. Do we have a shorting opportunity now? Let's read the dot indicators again. It has hit jump and thrust low with big move down 3 near the low. That may be a sign of exhaustion. I would be happier to see a big move up 3. We didn't have that. We had big move up 2. And that was on Thursday. Thursday, though we had big move up 3, up 2, actually price closed lower than open. That was a bearish shape candle. So you would not think of taking any long trade using intraday chart. On Friday, we have a bull release signal. It is still at price extreme low. If anything, I will look to take a long opportunity, buy opportunity, but not using daily interval. On daily interval, there is no Q trade setup. I could move to pivot chart on Monday and see if there is a low risk buy opportunity. And usually there will be. If price goes up, I'll have a low risk buy opportunity because my interval will be 5-minute pivot chart. Too late to short. The last shorting opportunity would have been on this day as a gap short day trend, but in a downtrend. Okay, FTSE, UK market, it was in an uptrend for a while. There were multiple trend line supports, those were broken, and then price has gone up but closed with an indecisive shape candle on Friday. There is a trend line support nearby in weekly and daily both. So even if price comes down next week, there will not be any low risk shorting opportunity. Once again, here also I see jump thrust low, but there is no big move up. So we will not have any buying or shorting opportunity here. Another reason we will not have any buying opportunities because of the same reason we will not have shorting opportunity. If price goes down, there is a trend line support. However, if price goes up, there is a trend line resistance. So we will wait for the proper trade setup. What can it be? It can be one of a reversal kind coming to trend line support, going up or going to trendline resistance, coming down. If it goes to trendline resistance, comes down, that will be a trade that we could take in All Ordinaries in Australia on Friday. The other will be if it breaks out in either direction. Currently there is no trade, but it is in a range. For swing trading, I will not say it is in an uptrend or downtrend because we have trend line support resistance both. It's in a range. This is probably the one market, an Australian market in a range. Let's see Nifty 50 India. This is in a downtrend. There is no trend line support and only trend line resistance, lower high, lower low, and as I mentioned, price is moving between inside the middle of the value, in middle of the boundary lines, lower boundary. That's another way of knowing it's moving in a downtrend, no trend line support, and it has gone up from the recent swing low after displaying a bullish indecision, then bull release, where the candle color turned to neutral and then to green. Now if price comes down, I'll be happy to take a short trade. I'll be happier if it comes to the trend line resistance. If it goes up little bit above it and comes down, that will give a very low risk shorting opportunity. I'll not try to buy now unless I see price is breaking above the trendline resistance, and that can also happen. Currently there is no trade setup. Both shorting or buying opportunities are going to either of them I think will come next week. Either a shorting opportunity that will be low risk if it comes down, and if it breaks out, I can imagine many stocks will give buying opportunities. It's in a downtrend. So global markets are either in a range or in downtrend, and if we look at the global index, overall how the global market is doing, we have trendline resistance, no trendline support. That's a way of knowing it is in a downtrend. Price is inside value area and lower boundary, not going to the upper boundary. That's another way of knowing it's in a downtrend. And of course lower high, lower low, it's in a downtrend. Once again, we see when it reached the swing low, it gave bullish indecision at the bottom, then bull release. Next candle turned green. Friday's candle is also green but indecisive shape because it has both upper and lower tails. What can be the lower risk trade in overall global index next? It will not be to the long side, because even if this trend line resistance is broken, another trend line resistance is nearby. So even if price goes up on Monday, we will not have a low risk buying opportunity. On the other hand, if price goes down from the trend line resistance, we will have a low risk shorting opportunity, and we would be happy to initiate that using intraday fine tune chart. Now let's look at the USA market, starting with the ETF SPY. Global market in a downtrend. Now USA market, I briefly looked at it. This is SPY. Is it sharply falling down? No, not really. What is the current state for swing trading? It's inside trendline resistance support. So it is range bound. It's not downtrending for swing trading purposes. If we look to the left, this was the bottom on a closing basis. After that, price recovered. Then price retested but heavily reversed on this day. The watermark support held. Then once again price tried to go down, went up, and on Friday closed right near that watermark support. So the support created by this low, which has a watermark now, that we have to say it is still holding in spite of all the negative news. and also we have a trend line support. We cannot take short now unless that support is broken. We cannot take long now unless this resistance is broken. So range bound as far as candle chart is concerned. Now let's look at the band indicators again. Low jump thrust. Then we had big move up 3, not at price extreme low. If it was at price extreme low, I have seen almost always big move up 3 after low jump thrust goes up to give profitable swing trades. But here we are not at price extreme low, so I don't have any idea how it will act. Let's look at the other ETFs. SPY is range bound. Let's look at QQQ. Very similar. Is it more encouraging to take long? I will actually think so. Though QQQ is weaker in terms of percentage change from the top, I'll be happier to say to look for buying opportunities here, and let me explain. Okay, maybe mixed. The low created by this drop was tested here. That held because of the sharp reversal day, but that watermark has now broken. So that is a negative relative to SPY. Similarity is it is also inside a range created by trendline resistance support. Because of that, we cannot take short unless the trendline support is broken, cannot take long unless the trendline resistance is broken. Now, why I'll be happy to take trades on the long side is because we have jump thrust low here, here also. Then we have big move up 3, which came at price extreme low. Now, if that is the case and statistically it shows that price tends to go up, what will I need to see before buying? All the concepts come together because it is inside a range. I am happy to take a long, but where can I take a long? I can take a long if I see prices coming to the trend line support, maybe even breaching that and then reversing, creating a false downside breakout. I'll be able to buy right when price goes up above the trend line support, putting stop below the low or low that will be made if price goes below the support. The other way I can take a long is it breaks out of the trendline resistance. Both of them will give attractive buying opportunities. And when almost everybody is scared, those give attractive buying opportunities. Again, I am swing trading, so I will not try to decide whether it will go to previous all-time high or not. I will not do that. I cannot do that actually. I have no idea where it will go. I just know statistically if I have either a breakout setup or a bounce setup from trendline support, both of them will give me attractive reward risk ratio of at least 1, and that's how I keep on taking swing trades. It's range bound. Another positive thing is there is a bullish headwind, but I again need to see a breakout or a bounce from trendline support before taking a trade, because all the concepts are additive. We cannot just use low jump thrust and ignore the trendline resistance support triangle. Okay, it's range bound. What about DIA? Very similar to SPY, but more attractive to SPY in some way. This watermark is now broken, but for practical purposes, we'll say that it is holding, though it is actually broken. For trading purposes, I will not put any weightage on that broken watermark because there is a trend line support very near and there is a trend line resistance. In this case, a bounce trade will not be appropriate if any price comes to trend line support and goes up, because if any price bounces up, the trend line resistance will be too close because it's coming near the tip of the triangle. So here the buy setup will be appropriate only if I see a breakout. I will not be able to use the bounce because it's coming to the tip. What is the reason to look for a buying opportunity? It has hit jump and thrust low at price extreme low, but now I need to see a big move up 3. That has not come yet. That may come if we see a breakout. Now what I am thinking is how to find the lower risk trades. I'm not trying to say that price will go up next week, but if it goes up, then I'll have easier lower risk trades than on the short side, because price is already near lower boundary for dia. Okay, let's see IWM, also inside a range. Now this is one thing I observed. All the 4 market ETFs are inside a range. That does not reflect the negativeness that we see in the news. And IWM, I'll be actually more happy to buy. Several reasons for that. It has come to jump thrust low at this point where the bullish headwind came. Price never retested that level. And even if we look at this watermark support, we had an attempted breach from this reversal day or recovery day. It's not strictly speaking a reversal candle, but recovery day, and we can see price has not gone below that. So IWM, in fact, from that angle is looking the strongest. Jump and thrust low already happened long time ago. It is at price extreme low. Now it is again near the tip of the triangle, so I will not be able to buy based on bounce from trendline support. I'll have to wait for a breakout from trendline resistance. Will I be able to short with low risk if price goes below this trendline support? No, because there is a watermark support very close by where a bullish headwind came earlier. That will be not not a place to try to short against such a watermark level. So I will again prefer to take a long trade. So I looked at the 4 market ETFs, all of them are range bound. None of them are in a downtrend. Whereas global market is actually in a downtrend when we looked at the global index. My preferred trading direction based on all this analysis so far in the USA market is actually on the long side. Market trend sideways, preferred trading direction long. Now let's look at the very useful market breadth total view. Internals, what does it say? This is the market breadth total view based on 2 composites, 4 major indices. Very powerful. Now let's start from another angle first. Remember just now I mentioned based on the chart analysis that I will be happier to take long trade in IWM compared to the other market ETFs. And let's look at the small cap versus large cap. That plot is also going up. That is in sync with the analysis on the market ETF. So I'll prefer to buy small caps now relative to large cap. Now on Friday we have a bearish shape candle. What is this candle? This is a custom index made from the 2 composites and 4 major indices. It represents the total view. We have a bearish shape and magenta color candle. The magenta color is from Phoenix Signal. Phoenix was created by Ian Woodward, may him rest in peace. I'm using that. Now Phoenix name mention, it implies that price may go up after that. So how it was created or named, I think that if Phoenix comes near the swing low or after price has dropped somewhat as in this case, then we may look for a reversal based on exhaustion. And I see that is true as of Friday's close. Once again, if we remember the market ETFs, this was the recovery day. That low is still holding for the custom index. Recovery day low is holding actually pretty well. Price didn't even go below that on the second attempt, and the third attempt on Friday also didn't go below the second attempt as well. Now we have a distribution count of 1. Where is that coming from? If we look down, that is coming from Nasdaq 100. What it tends to say that large cap technology stocks were more down on Friday, not the other categories. None of the other categories gave any distribution count on Friday, only Nasdaq 100, probably because of large cap tech stocks. That is encouraging. Why? Because already we saw we would like to buy small caps, and now we see large cap techs are weak. So that's fine. That's perfectly aligned with our view so far that we may look for buying opportunities in small caps. What about growth versus value? That is still going down. So we will not look to buy growth, we look to buy small cap and value. And the Phoenix may rise. A market may rise from the ashes like Phoenix rises. Okay. Now, few more things to note. I just a few days ago completed the second part of market breadth total view, and I mentioned that we could look at divergences of the internals. In this case, because market is at a low, we look for bullish divergence. And I also mentioned which interval is appropriate for the different internals. For new high, new low percentage, I mentioned the appropriate interval is daily, and that daily interval is showing a bullish divergence in the total view. That's another reason I'll be happy to buy, provided I have a low risk buying opportunity. Now let's look at another important plot. All these are leading indicators because these are internals. Percentage of stocks above 50 MA based on the total view. The yellow line, is it making lower high, lower low? No. If we had trend lines drawn on the yellow line, we would say it is also range bound, just like the market ETFs are range bound. So we have no trend. Market is already at the lower edge. It is having jump thrust low in multiple market ETFs. I'll be happier to buy. Those will be lower risk entries. Now let's look at this total view custom index using at a glance chart. I have all the things placed on my custom menu bar. It is also inside a range. The total view index is inside a range. It has hit jump thrust low. Then it in fact gave big move up 3 at price extreme low. Statistics says that is more likely to go up. However, all the analysis is additive. So we have trend line resistance. We will not be able to buy now unless it can break out. But if it breaks out of the first trend line resistance, we'll have another one. We'll have to wait for the second one to be broken. Alternatively, here it is not so near the tip of the triangle, so I will be able to buy if it penetrates the trend line support little bit and reverses immediately. That will give attractive buying opportunity, and I'll be happy to initiate that using intraday chart. Right now, range bound and no trading opportunity. Now we saw, if I close this, go back, we saw that only Nasdaq 100 gave a distribution count, and I inferred from that itself that large cap tech stocks might have been weaker. We can confirm that from the mega cap custom index. Once again, just like we saw in case of all ordinaries, we see all the time when price comes to the trend line resistance, we are looking to short. Just like in all ordinaries, in case of this mega cap custom index, also we could short on Friday if it was tradable. It isn't tradable, it's a custom index, but if it was tradable, we would apply the exact same technique that we could do on all ordinaries. It's in a downtrend. Okay, I'll take it back. It's not in a downtrend. It is having trend line resistance, trend line support. So it's also range bound. On Friday, it came down. Friday was bearish, but overall it's range bound. Same conclusion as for the market ETFs. On Friday, we could initiate a short trade near the market open, but otherwise it's range bound. If the trend line resistance is broken, I'll be happy to look for buy setup. Or if it bounces from the trend line support, that will also give a low risk buy setup. It is not so close to the tip of the triangle. Now let's compare Nasdaq with NYSE, and I observed something interesting. I'll point that out. For a long time, I showed in the market recaps that when we look at the percentage of stocks above 50 MA, we look at Nasdaq and then we look at NYSE. Nasdaq was worse by about 10 to 15%, but that has changed now this week. If I look at the Nasdaq percentage, it is about 28, NYSE 32. So just 4-5 percentage point difference, no longer 10 to 15 percentage points difference. This percentage of stocks above 50-day MA. That means relatively speaking, Nasdaq was weaker and still weaker than NYSE, but the degree of weakness has reduced. Once again, I'll not spend time to read all the market internals. There are lots of insights in this chart. But I have the daily interval open, so let's use the internal that is appropriately used for daily interval, new high, new low percentage. We can see a bullish divergence in Nasdaq and a bullish divergence in NYSE as well. Price is coming down for NYSE composite, price is coming down for Nasdaq composite, but new high, new low percentage is making higher low. That is a bullish divergence. That's another reason I'll be happy to buy. Now, if we look at the yellow line, that is also moving range bound. We saw it more clearly from market breadth total view, moving range bound. There is no clear direction from there, but there are bullish divergences in new high, new low percentage in total view as well as Nasdaq NYSE composites. We also noticed the Phoenix on Friday came from Nasdaq. Another reason to avoid tech stocks. Not only mega caps, overall Nasdaq stocks are weaker than NYSE. Okay, so far I am inclined to, based on the divergences and the lower risk sides, to take long trades. Let's see what happens when I look at the market from other angles. The very useful sector, industry, stock, advanced decline, 1 month to 1 day. 1 month, everything is actually bearish, and the bearishness is increasing from longer term interval to shorter term interval. Friday is also bearish. It has been bearish for a while. If we look at the sector, industry, stock, advanced decline breadth, the best shorting opportunities is they were probably a few days earlier or maybe even few weeks earlier when the weakness was starting to show up in this graph. Now it may be a too late. I will be happier to see that the real time area, that is this part, turned green on Monday and then look to buy small cap stocks. That is my conclusion so far. And if I look at the bucket analysis, the distribution of the S&P 1500 stocks across equidistant buckets inside the Bollinger Bands, let's look at the pie chart. It's clearly bearish, 64% of stocks are below mid Bollinger Band. Is it too bearish? No. The lowest bucket is not near 30-40%. Is it too bullish? No, of course it cannot be too bullish. It is bearish. So we don't have the higher probability from bucket analysis because it is not at extreme low. But that's fine. The market is down for a while. We saw that from sector, industry stock, advanced decline breadth, and I'll not spend time much. Let's look at this graph only. Sector performance across 3 periods: 5-day, 10-day, 1 month. 1 month is the blue bars, 10-day green bars, red bars, 5-day. 5-day, most of the red bars are down, only one is up actually, that's energy oil. Maybe too late to go into energy stocks. Not that it will not go up or it cannot go up, the lower risk opportunities had already come long time ago. Energy is the strongest over all the 3 periods, it's up for all the 3 periods. Which ones are down for all the 3 periods? Healthcare had been weak for a long time. Infotech is also down for all the 3 periods: 5-day, 10-day, 1 month. Consumer staples also down for all the 3 periods. Consumer discretionary also down for all the 3 periods. Communication services also down for all the 3 periods. Financials also down for all the 3 periods. Why I am looking at it? If they are already down for all the 3 periods, these few sectors, 1, 2, 3, 4, 5, 6, the best shorting opportunities may be behind us. Because they are down for all the 3 periods and people are now usually very bearish now, that is the time I will look for a reversal trade in any of these sectors, or even better, the industry level. We can do the same analysis and look for accelerating industries even if they are not the strongest industries. It seems that the lower risk opportunities will come from buy side from this analysis also, because I am always comfortable to take trades in downtrending stocks also using a proper Q trade setup. We have multiple reversal trade setups. What it also shows that those who want to take only trades in uptrending stocks, they will find it difficult to find setups now because market is down for a while. Sector level also we see down for a while. Only energy they may look to buy, but in my view that may be a bit too late and too risky. Oil price may fluctuate a lot based on news coming out from Ukraine. Maybe too risky to buy into oil or energy products now. I look for buy setup in fact because it looks more oversold to me, enough oversold to look for low risk buy setup. Now let's look at the final angle, the technical breadth. Balance between bears and bulls, weekly interval first. Is it really that bearish? No, it's normal bearish, just 60. Okay, I am saying just 62% of all weekly signals are bearish. That is not severely bearish. I ran it on mid-price liquid stocks in the USA market. Not that bearish. There are number of bullish signals on the weekly period. So that is also telling me that when everybody is bearish and I see more bearish exhaustion for a long time, all the periods, 5-day, 10-day, 1 month, I like to buy, those will be lower risk opportunities. Now, did they come on Friday, daily period? No, no, it doesn't look like that. Friday, all signals 83% bearish, strength 56%, continuation 93, reversal also 95. So though I am looking for buy setups, I did not, I would not look for them on Friday at the close because Friday was bearish. Monday, if price starts to go up, I can do the same analysis in real time and look for buy setups. Now I tried to create Q traders group earlier and it is hard, very difficult to find Q traders who are willing to share ideas. So one gentleman asked again and I created a group, and in the group I sent a message that Based on Friday's close, we are not going to buy because market level is very important. 50% of our stock success is decided by market. Market is bearish as of Friday's close, so we'll not like to buy actually, but it will be a good exercise to find some of the stocks we may buy even on Friday, though actually we will not buy. Maybe we'll buy them on Monday. That would be a good exercise. Whether it's using Q systems or any system you are using, you may identify few buy setups but not trigger the trade as of Friday's close. Conclusion, I I am happier to take longer bullish trades next week. That is my preferred trading direction is long. The market is moving sideways, not downtrending as far as Q analysis is concerned. Now, if I said that, and in fact, the last 10 or so trades I shared on my website, most of them were on the long side. Most of the trades I closed were all with profit, more than 80% if I have to put a percentage. Now, I have about 10 more minutes. Let's do that exercise and I will focus on technique, and now using the tools a bit, I want to explain one thing. There are few things in Q that is very clear cut. For example, the trade setups, very clear cut. It can be breakout, trend following flow, pullback setup that I actually learned after watching Dr. Jeffrey's videos, and I have automated it, I think, very successfully. Headwind reversal, box sideways market, bounce exhaustion base. These trade setups are very clear cut. Personally, I don't like to trade unless I have one of these trade setups. That's clear cut. If I go to industry analysis or sector analysis, but I always say sector level is too broad. So if I go to the industry level, that is also very clear cut in my own trading. I'm either looking for stocks in the top 20% industries. So I short by 1 day or during market hours, short by real time, but now market is closed. Short by 1 day now. Whenever I see the checkered background, I know these are the top 20%. I always look to buy from these industries, or I sort by pace column, that's the acceleration column, sort by that and look for top 20% most accelerating. Very clear cut. No doubt about no, very simple, very straightforward. Either based on strength top 20% or based on acceleration top 20%. That gives enough trading opportunity, so I don't have to go beyond that. Technicals, I said very clear cut. What about fundamentals? Now let's look at the S&P 1500 stocks. That will be enough. Now I will be happiest to buy stocks with diamond characteristics, that is undervalued, with high earnings growth, with high revenue growth. Here, high revenue growth. I'll be even happier if those are being accumulated by funds. And if you see my last 5-10 shared ideas, you would notice that not always I look for funds buying, but now to be extra cautious, I am finding trades where fund score is cyan, fund accumulation is going on. I will be happier to do that. If I don't find diamond trades, I could, let's reset the fund accumulation, I could go for 3-star. That is undervalued earnings growth. If that is also not available, I am okay to go to 1-star also. That is either value stocks or high earnings growth. All are okay. These are the standard fundamentally strong stocks finding ways. But there are other ways. Meaning, even if earnings growth is, let's refresh the stock list. Even if earnings growth is not that great, if it is reversing from negative to positive, this one, for example, this one. Let's choose this one. Here earnings growth is still not above 25% in the latest quarter. Here 15% only. However, it is reversing from negative to positive, and it happens to be an undervalued stock. So increasing earnings growth itself is a good enough reason to buy. Why I came to this discussion is that when I am looking at fundamentals, I have some easy ways to just click the diamond and find trades, to click the 3 star and find trades. But there are other ways using the smart action buttons to look for trades. I have 5 more minutes now. Let's now execute a workflow where I will look at the fundamental the last and also in the beginning. So let's see how that goes. This is my universe of liquid mid-price stocks. Let me calculate a scorecard of that. So why I am not going to look at fundamentals first, because on fundamental side I may be more creative, looking for stocks with increasing earnings growth or reversing from negative to positive earnings growth. I have some scope to be creative, not on technical side. On technical, I have very clear cut trade setups. On industry side, I have made it very clear cut, either top 20% strongest or top 20% most accelerating. Fundamentals, I can be creative if I don't find enough diamond setups or 3 star or 1 star. So how does it all work out? If I am doing it near the market close or after the market, let's say after the market close, that's different from if I am doing near the market open. Let's say I am now trying to find stocks near the market open and I want to buy only from this list. I have already created this list of mid-price stocks, liquid stocks. Let it create the scorecard. Then I will show different ways of different workflows of finding the same 360-degree setup. Let's give it a few seconds to complete the scorecard. Okay, the scorecard is updated. Now, what I want to do now, I could do top down. Okay, so there are many possibilities. Maybe in different sessions, I will look at different possibilities. Later on, I plan to take a masterclass on workflows also. Let's say I am looking for top 20% industries. And I have my universe. I want to drill down into that universe. And these are the stocks. And remember, I told I can be creative on the fundamental side. So I don't want to click the diamond and immediately look for trade setups. Instead, I'm just going to look for stocks that are up on Friday. What I am left with, if I see the statistics, 76 stocks. And because I click the up button, all of them 100% are up. I don't yet want to look at the fundamentals. I want to, you remember, technicals also very straightforward. So let's look at the trade setups using Finder. Click this button. Now I have only 1, 2, 3, 4 buy setups. Only 4 buy setups from those stocks that are up on Friday and that are belonging to the 20% strongest industries. Now I will go back to the fundamental. It's calculating the scorecard of only these 4 stocks now, and I showed earlier that Friday's technical breadth was bearish, so I was not expecting to buy anyway, but you see how I am looking at fundamental last, because I may be a bit more creative. And why I am mentioning this today is because market is very weak. It's not easy to find bullish trades. So I may be a bit more creative on the fundamental side, looking at stocks with increasing earnings growth, for example. That's what I mean by creative. But industry side, technical side, very straightforward. Not much scope to be creative. So let's look at the scorecard. Let it create the scorecard again. and then we'll see if these are having good enough fundamentals. I'm at 1 hour point, but I think it will finish the calculation soon. Give it a few more seconds. Updated. Let's look at the scorecard. Well, instantly I see there is one value stock and one high earnings growth. So these two are 1-star candidates. If I click the 1-star, both of them are coming C's and UMPQ. One is laser facilities. Interestingly, in one of the recent market recaps, I pointed to this industry, laser related regional banks also. Okay, and if I now see at the other two stocks, is there a scope to be creative? Let's look at BCE. Here earnings growth is turning negative from positive. Valuation not great, medium, not very bad, not very good, but not something I'd like to buy. The second stock that is not 1-star is CVBF. That also I see earnings growth is coming down, so not much scope to be creative. Valuation is also overvalued. So I am left with these two stocks. Let's close all charts. Let's look at these two charts. UMPQ. You can read the ticker symbol from here at the top. UMPQ, it is inside a triangle just like the market is. However, unlike the market, on Friday it closed higher, and see again it closed right at the trendline resistance. If it goes up, it may give a better buying opportunity than the market, because on Friday it is actually up, the relative performance went up. No trade setup now, but stronger than the market. Fundamentals are good enough and in one of the strongest industries. The other stock was C's. This is actually looking better. During this crisis of Ukraine, it came down from where? Right after displaying the bearish headwind. Very useful signal to protect profit in long positions and also potentially take a short. I have mentioned if we don't take the bearish headwind short setup, we may look to short the next bearish flow candle, provided it gives a low risk opportunity. So let's spend some time again on the technique. We would not take a short on the bearish headwind day because it had a lower tail. Next day we had a bearish flow, and I mentioned bearish flow after bearish headwind may give a short opportunity, but in this case the stop would be too far. Let's clear the lines. On this day, on a shorter time frame, maybe 30-minute, 1 hour, it was moving inside a triangle. Then we had a magenta candle, so we could again look to short, putting stop just above the range. In this case we would not put stop above the recent high. Anyway, after that price came down, stopped right at the watermark support. So it had a double bottom, now it is creating a triple bottom. Now it has a trend line support. It reached jump thrust low from where a recovery was likely. Last couple of days it is actually going up. Market is not going up. It has trend line support, no trend line resistance, but it is in a box, so it's range bound, but we have a bullish flow on Friday. So if anything I like to buy, let's look at it using the at a glance template, and I'll also use the HSI like template. Great, the weekly is looking even better now. Beautiful, isn't it? Now we see the trend line support was already here. That means if I looked at it earlier when it hit the trend line support in weekly, which would have been on this day or the next day, we could buy right at the bottom using intraday chart because we know the risk would be very small. So we would be already in the trade by Friday's close with a significant profit. Once again, the trend lines work beautifully. It has a bullish flow on Friday, but the weekly is not cyan, so it's not giving a flow long trade setup. The last buying opportunity would be, in fact, at the trend line support when price sharply came down, suddenly came down, gave jump thrust low, big move down 3 with high volume, bearish pressure. Very next day it went up, so it gave a bounce setup, and that's what I meant earlier. Q Techniques has several different kinds of reversal setups. In this market, those who buy only trend following stocks may find it difficult to have buy setups, but we had a perfect bounce setup on this day. This is looking much stronger than the market, going up for last couple of days. Sees world. So if it goes up, you may look for a low risk buying opportunity. If you don't see on the daily interval, you may look for it in the intraday charts. Now, this is one of the workflows. You could create a list of strong fundamental stocks, and let me spend 5 more minutes on that. I will not try to create the scorecard on my liquid stocks universe. Let's look at the S&P 1500 stocks to explain the way. What am I going to look for? I am going to look for value stocks. Now I'm not using the combo buttons. I'm using this battery icon here. This is the valuation button. So I use the undervalued stocks. I saw value versus growth up. In fact, okay. Allow me to have 5 more minutes because I also saw, as you saw, small cap is doing better. If that is the case, why don't we look at the Russell 2000 constituents? I would not like to find trades from S&P 1500 stocks, that is small cap, mid cap, large cap, mega cap, everything. So let's look at Russell 2000 constituents. So we saw IWM relatively speaking, much stronger than the other market ETFs. Small cap is doing better, and now we know value is doing better. So this is my way to find the strongest stocks based on all that insight. I'm going to create a scorecard of the Russell 2000 constituents. During webinars, it takes a little bit longer, few more seconds. So let it create a scorecard. Then all the analysis we did earlier, we are going to put that into action and find some strong fundamental stocks and then look for buy setups in them next week if they start to go up, and we'll also look at their industries in real time, seeing that industry is either going up or accelerating, strong or accelerating. Let it create the scorecard. Because we have the ability to find the constituents of any index, we are able to find Russell 2000 constituents easily, and there are many other indices. You could, like S&P 500, S&P 100, or Nasdaq 100, depending on which type of stocks are doing better, we could look at their constituents. Now, this is my constituent now. I am looking to buy small caps. So let's look at that scorecard. I'm going to look for value stocks. So I have already found small cap value. How many? Let's look at the number 543. Now on Friday, 24% of them went up. That's interesting, isn't it? When I did the analysis last time, only 4 stocks came up with some kind of buy setup, but here I see the percentage is relatively much better. 24% went up. Now I would like to be cautious and find the stocks funds are accumulating using this button. Let's click that. Now I am left with 128 stocks, and now see my percentage up has gone up 31%. What does it show? It shows that this criteria is valuable. The percentage of stocks up is going up when I add fund accumulation. That's good. So I am left with 128 stocks. This is my prospective buy universe maybe next week, because it is small cap, it is value, and funds are accumulating. That's how I hone in on a particular category of stock or categories of stocks based on the market breadth and the other analysis. I'll not look to find any trade setup today. If I find some opportunity, as I always do, I'll try to share them on Twitter or my website. Let's end today's session. 10 minutes past 1 hour. Thanks a lot for joining. I look forward to seeing you in our next session. The next public session will be coming weekend. Have a great weekend. Keep safe, and as the live examples I share publicly show, there is no reason not to do that. Trade profitably. Thank you. Bye bye.